Welcome back to Inside Guelph. Well, the mortgage rates, the interest rate, variable, fixed, it's all a giant mess in my head. So to help me sort it out, Darren Woodcock joining us, mortgage expert. Thanks for being here. OMAC.
Thank you.
All right. Now, interest rates incredibly low.
Yes,
right
they are.
Now.
Yep.
What are they at right now?
Well, we're looking at 5-year fixed terms in the range of the 3.59 to 3.79, and variable rate mortgages, which have come back into flavor. We're seeing prime minus 0.7 and even seeing prime minus 0.8 in some cases out there as well. Prime today is 3%.
What?
So that means, yeah, if you took a variable rate, you'd be below 3% with your interest rate. So.
Okay, so this is my question then to you, because I hear that. And what about the people who are locked in, that we locked in before all this happened, and it sounds so exciting, and you're reading about all these, should we be breaking our mortgage to take advantage of these low interest rates?
Yeah, I mean, that's a great question, probably a question we get a lot in the office. And 4 months ago, back in April, everyone was locking in because rates looked like they were going up, and now they've come back down again. To answer your question, though, it really depends on what type of mortgage, when you locked in, how much term you have left. In many cases, if you have less than 24 months to go on your mortgage, it may pay, depending on your penalty, because you can't get out of the bank's mortgage without a penalty, it may pay you to break. And we're certainly, what we're able to do is once we find out what that penalty is, we can run the numbers to see if it works for you. In many cases, if you're paying over 5.5% today, you might want to really look into seriously considering breaking your mortgage and going with today's low rate.
So you're saying you would do the numbers for us that if the penalty was X amount of dollars, they'd put that over the new mortgage, and then you'd decide, am I making a savings in my low interest rate compared to...
Right, because depending on your mortgage balance, those penalties can be really significant. Mm-hmm. For example, $13,000. And people say, just like you do, they wince and they, $13,000 to break my mortgage, why would I do that? Well, if paying $13,000 saved you $20,000, would it be worth it? You know, most people think it is. But that's a bitter pill to swallow, $13,000 penalty, and you really want to look at the math and the numbers. That's what we do. So we have calculators that'll take you through all the process, look at what the penalty is, how it's going to affect today's new rate, what your new payment is, et cetera, et cetera.
Okay.
So it really comes down to how your numbers work, but in many cases, less than 24 months, you might want to look at it. The reason we're saying it is rates are at the bottom, and they only have one way up when they're at the bottom, and I don't know what they're going to be in 24 months. So you could miss out.
That's right.
I don't know.
But see, this is what's so frustrating, is that I mean, you must get bombarded. I just want you to tell me what to do. Like, when are they going up? How soon? How fast? And I know you can't give that information.
Yeah, if I could give that information, I probably wouldn't be sitting here. I'd be in some warm vacation spot on an island somewhere. But the reality is we can only look at what's happened historic and sort of trends. And the most hard to predict is what's going to happen to the variable rate. Beginning of this year, it looked like our economy was going great, and the Bank of Canada uses the prime rate to control inflation and to stimulate the economy. So they made their last quarter point raise a couple weeks ago, and now all the experts, including the bank economists, are saying, gee, we don't know what they're going to do next, because it's all dependent on economic recovery, et cetera, et cetera. And we're being dragged down with what's going on south of the border, and their recovery is not as quickly happening.
Right.
So that's influencing what's happening here in Canada. So, I mean,
messy.
Throw a dart against a board, you might come up with the right answer. And the safe bet is you can benefit right now by taking a variable because it's below prime and cheap, and versus a fixed year. But you've got to be able to tolerate the fluctuations that are going to happen, because prime only has one direction to go, and that's up.
Right.
So
it's just a matter of when it will happen and how fast.
That's right. So you have 3.59, 3.69% versus a variable. Tough choice, and it's only a personal one.
I'm going to have you come back, because we just skim the surface, and it is very messy to me and chancy, and I just need someone to hold my hand through it all. Thanks, Darren, for being here.